This is Craig Haugard with your Financial Issues Ag Update. Corn got off to a good start yesterday as it was higher on dry weather concerns, with support also coming from the announced sale of 23.5 million bushels of corn to China. As the day wore on, however, we turned lower, and from a technical chart perspective, may have put in a blow-off top as December traded above the 200-day moving average, took out the double top at 363, and then dropped to close lower for the day. Pretty discouraging performance if you're a chart guy. The crop progress report showed the condition declined by 2% from last week to a rating of 62% good to excellent. 94% of corn has entered the dough stage, with 63% dented and 12% mature. StoneX released their projected yield report late yesterday and reduced their estimate of the national average yield by 2.8 bushels per acre from last month's report, now projecting a national average yield of 179.6 bushels per acre. Soybeans started out sharply higher, reflecting bullishness of traders as a result of the generally dry weather pattern that continues for the Midwest. By midday, however, the light rain systems crossing the western Corn Belt seemed to kill the rally as we ended up only 3 cents higher for the day. The crop condition report showed a crop in decline as we slipped from 69% good to excellent a week ago to 66% this week. 95% of the crop is set pods, with leaves dropping on 8% of the crop. The StoneX projection showed the national average yield decreasing by 1.3 bushels per acre from last month to a projected 52.9 bushels per acre. Wheat worked higher yesterday, with Chicago wheat values trading to the highest level they've seen since late April. Prices were partially propelled by funds who were buyers of 5,000 contracts during the session. Our neighbors to the north released their latest projection, with Stats Canada pegging Canada's 2020 all-wheat production at 35.7 million metric tons. That's up a bit more than 10% from last year. Here in the U.S., harvest continues to roll along, with 69% of the spring wheat crop now in the bin. Cotton futures continue to consolidate in a real narrow trading range, with December futures finishing 8 points higher as they closed at 65.16. Crop conditions slipped by 2% from the previous week to a rating of 44% good to excellent. 93% of the crop is set bolls, with bolls opening on 29%. As a Midwest guy, I have pretty limited exposure to cotton farming, but I was in West Texas last weekend and had the opportunity to see bolls open in a few cotton fields. It really is a beautiful sight. Livestock futures turned in a mixed session yesterday. We had the October live cattle ending the day 40 cents higher, while October feeder cattle were up 45 cents at the closing bell. Lean hog futures, however, were weaker, with the October futures closing down a nickel. Class 3 milk futures were marginally lower, as we had the September futures down a point, settling at 15.68. And meat cutout values were mixed. Choice box beef was $1.45 lower, closing at $227.95. Select boxes were up 46 cents as they settled at $215.32. And pork carcass cutout values were $1.23 higher, closing at $72.62 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.